You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Henry the FLOWMASTER SCHWARTZ from CBOE. The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music can mean but one thing. It is Thursday. It is noon Central. It is 1 p.m. Eastern. Are you ready to rock out with a little bit of bi-weekly market action? Well, if so, you have tuned in to the right show. Yes, welcome to the Option Block. What the cool kids call the old OB. My name, of course, Mark Longo from the THE, OptionsInsider.com, as well as from the network. Hope you're enjoying said show and indeed said network these days. A lot of great content over there for you. So if you're one of the handful just listening to the Option Block, not listening to the full network, man, you're missing out. Get the full network wherever you get this show. It's available just about everywhere on the planet these days, including the newfangled YouTube Music. Google had to go and get rid of Google Podcasts and move it all into YouTube. That's what Google does. They kill off a product, seems like every year or two out there, and this is the latest one. So why have a hub for podcasts? You can just lump it all together. So there you go. I know some people on the Android and Google side were a little bit confused, but it's all available everywhere under the sun. And of course, if you want to get even more in your lives, only one place to go, theoptionsinsider.com/pro. That'll get you access to the pro Q&A like the one we just did with our old buddy, Mr. Bill, longtime risk manager and market maker in the options world, now diving deep into the world of crypto. So you don't get that intersection very often, which is kind of fascinating. A lot of you folks had fun with that. You can check that out, of course, theoptionsinsider.com/pro. Also get you live to this, everything else we're doing. And, of course, oddities, giveaways, fun bonanzas. I'll be going down to OIC in a couple of weeks. Going to be producing a lot of content down there. That'll be all hitting the pro feed first as well. So you get kind of early stuff, exclusives, all kinds of good stuff. over there. TheOptionsInsider.com/pro is the place to go as we go around the horn and see who's joining us on the old program today. First, he's busy slinging some nanos. Let's see if we could break him away from his reverie. He is the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. And I bet you didn't know it, listeners, the biggest trader of nanos in the game. Uncle Mike, welcome back to the show, sir.
That's me. I'm just trying to churn and burn, baby.
You are 87% of the OI in that product, sir. So congratulations.
Never traded a nano in my life.
But you know what? Now that we've said that, I think you're legally obligated. You have to do at least one. So report back to us before the end of the show and tell us how that process went. Since we're talking about nanos, we've already invoked him. He is Mr. Nano, even though we call him here on this network the FLOWMASTER, a.k.a. Mr. Henry Schwartz, beaming in from a busy day over there at CBOE East. Mr. FLOWMASTER, welcome back to the show, sir. And give us a quick glimpse behind the scenes. Inquiring minds want to know, what does a busy day at CBOE East entail?
Oh, it's been a busy week. We'll get into that in our market coverage because things feel very different in the last few days. Let's see. Today, I've had a lot of meetings. Worked with the data and access team to review kind of all of our business lines, and then I dug into some new flex analytics that we have, which you will like when you see them. We're going to have flexes with Theos and Greeks and assembling the legs of flexes into complex orders and identifying flex revcons, which now have a new name. I was talking to a broker on the Amex, and he said, I need to be able to see the EuroFlexes. And I said, what is that? And he's like, the EuroFlexes, they've been trading today. And what he meant was the flex revcons using European style instead of American style options. And
it's called a EuroFlex now.
That's what he calls it. And I was like, all right, somebody's coined. And it sounded like that was the term. So we have a new term in the industry, EuroFlex.
Wow, it snuck up on all of us. I am completely out of the loop on that one. I need to start slinging some euro. I've been trading EuroFlexes all these years. I had no idea what I was doing out there. Wow, fascinating though. How the lingo evolves out there, listeners. All sorts of fun stuff. And speaking of evolving, I think we have him via a new methodology. Let's see if he can hear us. He is none other than the greasiest of meatballs himself, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, can you hear us, sir?
Yeah, you guys sound great. Good to be here. I'm excited.
All right, we are all excited. You're slinging nanos. Uncle Mike's slinging. Everyone's slinging nanos, except me. I'm slinging EuroFlexes, apparently, as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, let's get to it. A little bit of the old Trading Block. As Henry alluded to, it has been an interesting week, to put it mildly, out there. A lot of red, a lot more red on the screen than I think a lot of you long-term bulls like Uncle Mike are really prepared for, it can handle. I know a lot of you who are newer additions to this market are like, what is this color on my screen? I'm not used to this. Doesn't it only glow one color, which is green? These days, no. It has been all over the place, including a lot of red. Longest protracted losing streak in quite some time for the S&P. A lot of the other indices fighting to buck the trend, not always succeeding out there. As we were coming into the start of the show, it seemed like, okay, maybe we got a little bit of an upside trend in here finally, breaking the downside mold. Yesterday we were threatening to break 5,000. I think we got to about 50.10, then we bounced off of it. And it seemed like today, all right, the bulls are back. They have their bit in their teeth. Not that long before showtime, listeners, most of the major indices were up somewhere in the ballpark of 1/4 or 0.5%. Coming in and start of the show, though, as is wont to happen out there in these markets, all of that has changed, listeners, and the worm has turned out there. The S&P has now swung negative, not heavily, but off almost about 0.1%. The NASDAQ has now swung to the negative as well, off nearly 0.25%. The Dow's flirting with unched. I'm sure if I re-rack this in a few minutes, it'll probably swing to the negative as well. The one major index bucking the trend still is the small caps, up about 0.4%, but they are also well off their highs from earlier in the session as well. So it seems like the bulls had the bit in their teeth early, hence Uncle Mike buying all those nanos. And then now, as the day has progressed, seems like we're getting a little bit of dark side, which also explains why vol is whipsawing all over the place. When we were coming into the start of the show, we were down close to half a point in VIX Cash. As the show has kicked off, now we are literally back to unched where we were on the Monday show, which is a little bit shy of 18, 1780 to be precise. Of course, if we wait 5 minutes, it'll be moving a half a handle again, so we'll see. VVIX getting frothy again at about a 95. That's still down 3 points from where it was earlier this week, but also nearly 20 handles above where it was just about a week and change ago. Remember, how many times have we said this now? When VVIX gets to the mid 70s, you might want to pay attention because something's probably going to pop off. And that has literally happened every time we've gotten down into that range recently. It's not a guarantee. Anything could happen. Of course, we could languish there for a little while, but if past is prologue, we are probably not going to hang out there for very long, and that is the case yet again. A VXX at a 15 even as we kicked off the show, up about a quarter of a point there. UVXY 3730 continues to give up the ghost, down about 3/4 of a point from the Monday show. SVIX at a 37. That puts it unched from the Monday show, and UVIX, a rare moment of unched for UVIX as well. That's very hard to do. UVIX at an 11, the exact same level as it was on the Monday show. UVXY reverse splitting. Have you guys and gals gotten a little more active in it? I will admit, I've been playing a little bit out there as well, just for a little bit of fun. So we'll get to all that maybe on oddities or vol views later this week. But let's go around the horn first and see what's lighting up everybody's tape. Let's go the way we came. Let's start in the land of Uncle Mike. He's slinging nanos left, right, and center. He cannot stop himself. He is an addict, a convert to the cause. Mr. Uncle Mike, A, why do you love nanos so much all of a sudden? And B, what else is lighting up your tape in a definitely not Uncle Mike type of week, sir?
What the heck's a nano? Oh, yeah. Anyway, sorry. So in looking at it, the one thing right now that as a bull you look at in a time like this is 5,000 on the S&P 500. Will it hold from a technical standpoint? Who knows? It might or it might not. But in the near term, I mean, let's just be honest with ourselves. We've had a run. If you go back to October in the last 6 months, we've had nearly over a 20% move in the markets. And when the markets have big runs, they have big pullbacks. And in relation to the upside with which we've had over the last 6 months, this really isn't that big of a deal when you think about it. Now, it feels like a big deal when you go down almost 5% off the highs, but when you have such a huge run, stuff like this is going to happen. Now, what's the big story right now? I believe is AI going to push the market up? Are we going to continue to raise rates? Are we going to not lower rates? What are we going to do with rates? Rates and AI are the big thing. We have earnings coming. We have earnings, of course, but on the grand scheme of things, AI as well as interest rates are kind of the big deal. Now, in looking at it, we're still above levels in terms of bond pricing of where we were 6 months ago. And not by a lot, but by a little bit. And so we still have the kind of sort of, I hate to call it like a true inverted yield curve because some longer yields are more than the shorter term yields, but ultimately the 1 to 3 month treasuries are still the highest paying game in town in the bond world. And that's something with which it's kind of head scratching in the marketplace. What do you do with it? And when we don't have buyers of longer term paper right now. And I think it's just, there's a lot of fear of the raising interest rates. And oftentimes bonds are an indicator of where stocks can go. But just the fact that we still have the shorter term rates doing what they're doing, where it's something to where it's kind of head scratching. And so when that's the case, you always need to be careful with what you're doing and see where you're at with things. And so ultimately, like I said, I believe that there's a lot of times that the bonds actually can be an indicator of where stocks are going to go. And when we do not have the buyers in the bond market, I mean, we have people buying them, obviously, but when we're getting the pullback with which we have. I mean, if you look at TLT just on the year, the pricing of TLT, the ETF that tracks 20-year plus U.S. government treasuries, is down over 12% on the year. And it's still above where it was back in October. October, it was right around the 82 level, and now it's at the 88 level. However, it was up to the 100 level on late December. So you're getting the selling going on in the bond world. And when there's a threat of raising interest rates, it does kind of spook investors. Now, on the flip side, the stock market could say, well, you know what? We have all these wonderful stocks. The economy's hot. Bring on your interest rates. We don't care. We're still going to go higher. And in a lot of cases, that's what's been happening with the stock market. So will that continue to happen? Well, I think earnings and AI will be the determining factor on if it does or not. And in terms of the pullback with which we have had over the course of the last few weeks, that part of it, I really think it's just part of the fact that we've had such a bull run since last October. And that's what I'm seeing today when I'm not slinging, what are they called, Nanos? No, I'm not slinging those.
No, you're buying those 5,000 SPX Nanos. You mentioned 5,000 in the SPX level you're watching. We were starting to threatening that level again. You think if we break that, maybe even today, you think that's a lookout below moment for the market, or just kind of another data point to add to the mixer?
I mean, I think it's just another data point to add to it. It's a key number. So whenever you get 2,000, 3,000, 4,000, 5,000, it's a key number. For right now, though, I think it could serve as a number of support, or it could be kind of like a magnet number in that if the market does go to like 4,960 or 4,900, then the 5,000 magnet might pull it back. So we'll see.
We shall see. Maybe we'll make that a little flash poll, see what our audience has to say during the show. As we keep on rolling out to the land of SIBO East, he is also busy slinging nanos and having a legion of meetings, it sounds like. But we pulled him away for the show. Mr. FLOWMASTER, sir, what is catching your eyes? As you mentioned, a very tumultuous week out there, sir.
It is. I mean, I think when we last talked, we were about almost 4% higher for the market, and I think VIX was about 4 points lower. So, things have gotten rocky, and I agree with Mike. I mean, it's more of a macro picture. I think everybody, everybody was looking for the soft landing, and it kind of was priced in. I think now what you have is, I think most people believe the Fed wants to cut rates before the election, just because that's kind of how the game works. But the data is not really letting that happen, and it keeps getting pushed out. And I think that plus the global conflicts out there, it's just people are nervous. And we had a great Q1, low volatility. The market just kind of went straight up for 3 months, and now people are like, well, wait a second, this really does feel different. Now we know things can turn on a dime, and you know what? If we ran up 50 or 60 handles this afternoon, it wouldn't surprise me, and maybe everybody would get very, very comfortable again. But we've had a lot of buy every dip and do pretty well, and the last week or so it's the opposite, right? It's sell the rip, so because we have had a couple up moves and they have not lasted, so including today's. So I don't know, it definitely it feels different. People are nervous. It's no fun for most people are just generally long, even if they're actively trading. We all have retirement savings and 401k plans and everything else, and 4%. Losing 3 or 4% in a week is actually, pretty significant in terms of the emotional end of things.
Where do you fall, sir, on that pivotal question, that 5,000 level? It looks like we might have a chance to even break it today. We're back at the lows we were yesterday and threatening below it. I think if we break that level, is that maybe it? Is that the near-term lookout below, or is that just, as Uncle Mike said, kind of another data point?
I don't know. The way I've been feeling, it seems like look out below. It just seems like there's a lot of people that are, getting a little bit burned here and there. And, I think we closed below the 50-day moving average or something, which all the technical people go a little crazy on. And it just seems weak. I mean, we kind of overnight we've been green in the futures for the last couple of days, and it just doesn't last into the regular session. So it really does kind of seem like people want out, whether it's temporary or they think they're going to do something else with their money, or, yields being a little bit higher means a bank account yield is actually can be competitive. So at this point, I'm just not feeling great about the market.
FLOWMASTER, feeling the heebie-jeebies. Let's go out now to the Southern Volatility Mecca. Let's see what he's feeling. A little bit more vol on the screen. That's usually a good thing for the pit crew out there. Mr. Meatball, sir, what's been catching your eye in a very tumultuous week?
Yeah, I mean, to Henry's point, we're now clearly below the 50-day moving average. We're threatening 5,000, and the market does look soft. And, the headline last week that kind of started this was the geopolitical stuff, right? I think this all really took off on, we'll call it, we had a bad day on the 4th, but it was really the 12th that kind of forced us below the 21-day moving average that had been such a magnet. And now we're below the 50-day for the 4th day in a row right now. And the level I'm watching, Henry, you'll like this level. You and Michael both like this. The level I'm watching, do you remember, Mark, the Fed day in February where we had the Fed day on the 21st, and then we had this massive gap open on the 22nd and rallied, I want to say by the end of the day, we were up close to 100 points.
It's kind of blurred into all the other mega rallies we've had of late, sir.
Yeah, no, this was the single biggest day that we've had this year. We closed on the 21st at 49.81 and closed 50.87 the following day. So up 106 points. Well, a chunk of that was a gap. So we had gapped on February 22nd, folks following along. We had gapped up to 50.40. So we'd actually gapped open about 60 points. So I'm wondering if we're going to fill that gap, and that level would put us down at 49.81 as a potential stopping point. From there, you'd be looking at the 100-day moving average at 49.30. The 200, and this is here's how hard we've moved. The 200-day moving average is still about, close to 10% away, hanging out at 46.71. So we need another 8% drop to get down to the 200. So, it's a little bit of a lookout below. And, this geopolitical stuff that kind of kicked this off was really, I believe, hiding underneath it fears about interest rates, as Mike TOSAW said. The long bond looks terrible. The 10-year looks bad. And then also interest rates. I think ASML on Wednesday is really troubling because that's the first chip maker that's involved in this whole AI craze that absolutely, quote unquote, pooped the bed when it comes to their earnings. And then TSM's out today with an underwhelming guidance. And now you have people a little bit freaked out. And here's the thing: we don't get any big chip earnings until Intel, and the ones that have really been hot are not Intel anyway. It's been AMD and NVIDIA, and AMD doesn't report till the end of the month. So, April is traditionally a low vol month and a a bullish month, but they're taking this one out. We've got all the way through to, like I said, the 30th, I think, before we run into any earnings that could turn this thing around.
Not to read between the lines, but it sounds like from what you just said, if we break 5,000 today, you're in the lookout below camp, sir.
Look out below. I don't know. I don't think we're going to the 200. I don't think
200.
We're going to get
wow.
At 4,600. I don't think we're going there. But do I think we could fill that gap down to 49.80, another $30, or hit the 100 at 49.30, which is $80 away, another couple percentage? Yeah, that to me makes total sense. That would be top. The top was what, 52.60 down to 49.30 would be what, about 330 points. That's less than, what is that, like a 7% drop? Oh no. So that's kind of what I'm thinking. But if some of these earnings continue to come in really light, then the tune is going to change. And, we had this massive rally, and people had thought, well, rates are going to drop and AI. Well, the rate piece kind of at this point gone away. And now, but there was the AI piece holding the market up. If that AI kind of narrative fumbles, that's where you get some ugliness. And, I know we love talking SPX here, but the SPX is the tail and the dog is the triple Q, and those, or the NDX. And that chart looks way worse than SPX.
Interesting stuff. By the way, that was a lot of technical analysis for a guy who says he doesn't like technical analysis. I think you're getting lured.
I was thinking the same thing as you said that.
For years, you've been like, pshaw, all that technical, and now all of a sudden you're like moving averages.
I just said you can't run technical analysis on the VIX.
Oh,
which is true.
Okay, that is true. But yes, I've never known you as a technical guy. And now all of a sudden, sir, getting lured to the dark side. Who are you hanging out with over there in the Southern Volatility?
It's that Alicia Leslie.
I'll have to go chat with those folks. They're luring you to a dark and unseemly neighborhood, sir. I'm going to mute you before you start talking more technical analysis on my network. Instead, let's keep on rolling. Let's go out. Let's fire up the FLOWMASTER machine. See what's cooking out there. And spoiler alert, listeners, it's a banger out there today, as witnessed by the fact that I said on the Monday show, remember I said, that VIX ADV is going to soar after the numbers we've been seeing of late. And that is the case. VIX is averaging nearly 1 million contracts a day now, 930,000 contracts. That is a banger by any stretch of the imagination, really. And we're already pretty much almost halfway there again. We're at 482,000 contracts already. So we're already at a pretty banger pace out there, listeners, and ready to go for more. SPY, SPY's putting up numbers right now, 5.56 million. So we're fully 1 million contracts past the level that I would consider to be a pretty busy day. 4.5 million contracts in SPY right now. It's a pretty busy day. 5.56 million. Yeah, that's a banger. ADV 7.82. So continuing to move up there as well. The S closing in on 2 million contracts, 1.91 million. That's a pretty active day as well. The ADV 3.08 million. Doesn't even take into account the flurry of nanos, and Uncle Mike is slinging as we speak. Small caps, IWM 741,000. The ADV 1.32 million. And the Qs 2.6 million on the tape. The ADV 3.76 million out there. Let's get out to the single names, because lately, listeners, we've seen some banger days in the indexes, and the single names have not been playing ball. They've kind of been doing their own thing. 150, 160,000 contracts to break into the top 10. Borderline August or December kind of volume on the single name front. Is that the case today? The answer is no. Is it blowing the doors off? Also no. We're kind of somewhere in the middle there. Cost you 216,000 contracts to break into the top 10 today. So not blowing the doors off, but not anemic either. That gets us to United Airlines. 51.25 right now, up $2.50 today. And again, good for 216,000 contracts. They, of course, had earnings today, so that's why they're on the list. Number 9, our old friend Micron. We were joking for a while. Everything old is new again. Is it 1999 again? We're talking about Micron and Microsoft and a lot of these old names. Even NVIDIA is kind of an old school name when you really think about it. But I digress. Micron, number 9 today, 231,000 contracts. Micron, as the meatball alluded to, a little bit of weakness out there. 112.5 right now, off 385 or about 3.3%. They got as high as 117.62 earlier this morning. So they are giving up the ghost out there right now, off over $5 from that high. So they're coming for Micron. Easy for me to say. Microsoft would be next. That is number 8. Spoiler, listeners, 234,000 contracts. 406.80 off a whopping $5. Just ticked off about 440 now, or about 1% over there right now. Let's see how high. They got to about 411.89 earlier this morning. So they're off their highs as well, but not quite as aggressively as Micron is. Either way, good for number 8, 234,000 contracts. Number 7, our newest Dow friend, 179.40. It's the Amazonians, off about $1.86, or about exactly 1% today. Good for number 7, a little bit north of 250,000 contracts there. So you can tell, not a banger day. Number 7, we're barely north of 250,000 contracts. Number 6, it's the artist formerly known as Facebook, Meta, hanging out a little bit north of 500, 503.60. Actually, I'm just ticking again. Now it's 504.60. My quote's a little slow, obviously, today, listeners. Up $10.40. So Meta's saying, sell off. What sell off? Pshaw to that, up 2.1% today. Their high today was 512 and a quarter. So they've given up a bunch from their high, and they're still popping hard today. So, wow. Intriguing day out there in the artist formerly known as Facebook. Going up at number 6, 285,000 contracts. Number 5, the meatball, I was just alluding to them as well. Taiwan Semi, 425,000 contracts. They are coming for them today. 131 and about a third, off about 7 3/4 bucks right now, or close to 5.5%. They got as high as 135.13 earlier this morning before giving up the ghost out here. As you mentioned, there has been maybe, dare I say it, a little bit of weakness in that sector of late. And if our poll is to be believed, fully half of you thinking that the AI revolution is really what's driving this market. If we're seeing some weakness in that, that could be another thing that is kind of undercutting this market right now. Number 4, AMD. Good for 520. Again, we're at number 4. We're barely north of 500,000 contracts. AMD slightly up about 30 cents, trading 154.30 right now. They traded as high as almost 157 earlier this morning, so they're giving up nearly $3 from their highs as well. Good for 520,000 contracts today, and the number 4 spot. Number 3, keeping it in the A tech names. I was just saying, man, Apple seems like they put the 160 odd level in the rearview mirror for them, at least for a little while. No, back to 166.88. Man, how the mighty have fallen off $7.50 or 4.3% just in the last 5 days. So, my goodness, looks like they had a blip up to 176 yesterday. I'm not sure if my data is smoking something here today, but I'm guessing that might be the case. But either way, quite the run from threatening 180 last Friday now to 166.88. Good for number 3, 521,000 contracts. Number 2, you know what it is. It's NVIDIA, 1.1 million, 843 even, up about 2 3/4, or barely 1/3%. Their high, though, was 861.90 today. Their low was 824, so quite the range, and nearly a 40 handle range on the day. So whipsaw-y day for NVIDIA. Good for number 2, 1.1 million. And the number 1, the big dog, 150.5. Not looking as big as it was. Off $5 today, or 3 1/4%. The bad headlines keep on coming for Tesla. They laid a bunch of people off. Then they underpaid those people they laid off. A lot of bad headlines continue. Good for 1.6 million contracts today. And the number 1 spot. Can NVIDIA unseat Tesla? I don't know. If the stock keeps getting annihilated, then maybe some of the options use case will go away. But for now, listeners, you folks love yourselves a little bit of the old Tesla. You also love yourself a little bit of earnings. A hot week this week. Head on over to the website, theoptionsinsider.com. Click on the Options News and Articles tab if you want a dose of earnings season goodness. This week, like we said, kicking it off in earnest. Goldman on Monday, B of A on Tuesday, J&J, PNC, and Northern Trust, our friends down the street here on Tuesday. Wednesday, Abbott Labs, Alcoa, Discover Card. Today, we've got Nokia, as the Finns say it. Alaska Airlines, they're having some problems of late. And our old friends Ally and Netflix. And Friday, we've got Amex, P&G, and Fifth Third. So we're kind of back in it fully again, listeners. Let's look at a couple earnings move results reports really quickly. Then you folks can dig into them in detail at your leisure. Let's go to Alcoa. After the bell yesterday, they were at 35.5 going into their announcement. And coming into the start of our show today, when we ran this report, 35.70 is where they were trading. So they were up a whopping 0.4%, and they had priced in 6.2%. So apparently no juice to be found in the lands of aluminum. We got the Widowmaker, though, the former Widowmaker, coming up after the bell. I heard an argument this morning, people saying Netflix should be in the Magnificent Seven. It should be the Great Eight or something like that, and how they've been unfairly maligned by not being included in that. Either way, they've had a good run. After the bell today, $613.70. They were pricing in $51.50 in the past. They've moved $70 on the dot. So, yeah, a fair bit of less juice in Netflix, cutting some off the top there. That's a scary prospect, taking the juice out in Netflix, given how they performed of late. And there are a million other names for you to look at here. Listen, I can't go through all of them. We'll spend 3 shows full of data. That's why we give it to you folks for free, because we like you. The Options Insider is the place to go, because we got to keep on going right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. I need to take a break and a breath after all that data I sling. It's a lot of data to get at you, folks. But you know what? We like you. We like to make sure we arm you with as much data as possible. But it's now time for the FLOWMASTER to talk so that I can rest ye old vocal cords. Well, before I get there, let me just set the table for you, Mr. FLOWMASTER, because it looks like your first subject of ire, derision, call it what you will, is our old friend Snap, ticker symbol, you know it, you love it. It's Snap, S-N-A-P, trading $11.50, up 60 cents, or nearly 5.7% today. So bucking the trend today. On the year, they were trading about $11, so they're up about half a buck net on the year. So it looks like today's rally is what put them into the green for the year. They got as low as about $7.86. That came back in May of last year, and the high came in December, about almost $18, $17.90. So they are well off their highs and a little bit off their lows out there. Mr. FLOWMASTER, sir, what caught your eye out there in the land of Snap, sir?
So this is kind of interesting, and so I have a report that I run, which is, my trade of the day report, which just shows the most profitable opening sweeps from the day before. I have a trade of the week version, and so I ran that before the show, and I was struck by the fact that I kept seeing Snap showing up on multiple days, not just yesterday, but really for the entire week. So I dug into that, and basically it's kind of an interesting story, right? Every once in a while we've heard about, the Congress wants to force TikTok out of the U.S. basically, and then it goes away for a while, and then it comes back, and it's back. And I think actually somebody said it might be wrapped up into one of these defense spending bills. And when TikTok gets into trouble, then Snapchat benefits, right? Because I think investors seem to think that Snapchat is a decent alternative for TikTok. I don't know if it really is or not. I could ask my 13-year-old daughter. But what I was just looking at was a lot of call buying. So, as you said, the stock has had a pretty good run, especially considering that, the rest of the market has really run into some trouble. So, I was just looking at today's flow. It's the January of 2026 35 strike calls that are being bought. About 2,000 of those for 89 cents. Just half an hour ago or so, when the stock was 11.65. So those are longer dated, but we also have April 12 calls. Okay, those expire in tomorrow, right? So 1,600 of the April 12 calls were bought for a nickel. That was around the same time, so midday. And then a couple of the other just big ones. The April 11 calls were bought yesterday for 7 cents. Those actually closed at 20 cents. So on a percentage return, that's a 179% return for that option. Now they only have another. They don't have. Let's see. Stock was at 10.52 when they were bought, and the stock's at 11.52 today. So just a lot of these. It's a story stock. It's a name that people are familiar with, and like I said, it hit my best trades of the week on a daily basis. Looks like about 20 times in the last week.
Yeah, my son and all their buddies, they're all on the old Snap. No love for TikTok among that crew. So, maybe, who knows? Maybe Snap is resurgent. Maybe this TikTok ban is going to just play right into Snap hands. We'll have to go look at the lobbying bills for that and see who's lobbying hard for that. See if Snap is footing the bill for that. Mr. Meatball, sir, out there crunching all your flow all week when you're not talking technical analysis. Anything coming across your radar in Snapland, sir? Have you noticed all this paper Henry's talking about?
It hasn't been like large block trades, which is typically what I like to track. But, what I will say is every time I see bull action in Snap, it ends up being sad bull action, because Snap never fails to disappoint in disappointing. So they look like a nice one now. Please take your money before earnings on the 25th, because you won't be happy if you don't.
Yeah, Snap has had a few false starts, shall we say, to put it mild. I still wonder, what are they? Are they a social media platform? Are they a hardware maker? Because they've made the goggles, they made that drone. They keep trying. They say they're a camera company. They're an interesting beast, to say the least. You know what knows what it is, listeners, though? It's Ericsson. They make some of those handsets that maybe you saw back in the early 2000s but couldn't really buy because they weren't really sold here in the U.S. Good old Ericsson. I won't butcher their first part of their name. They're an ADR, obviously, so you can go look it up for yourselves if you want all 17 syllables there. But we talked about them. This may sound familiar because we talked about them just on Monday, listeners, on the old show. First, really quickly, before let me set the stage for you. A year ago, they were trading $5.40. They sold off to about $4.36 in October, right around Halloween. Then, like the rest of the market, they got their bit in their teeth post-Halloween. They rallied all the way up to pretty much the start of the year, almost exactly. December 28th was their high, $6.36. Then they gave it all back up again, back right down to tax day, which was the day we talked about them, ironically. They hit their near-term low of about $4.79. And that's when we talked about somebody coming in on Monday, listeners, and scooping nearly 3,000, 2,781 of the April 5 calls. Obviously, April expiring this week, listeners. They paid 15 cents for them. The stock at the time was about $4.88, so they got close to scooping the low, but not quite. They had earnings on Tuesday, right after our show, pretty much. So we said we were going to know by today whether these calls were paying off. The stock coming in earlier this morning was looking a little bit better than it is now. They got up as high as $5.11 today. So they were looking pretty good. That was pretty much the high for the week. No, they popped to, I take it back. They popped to $5.12 on Tuesday. So like I said, they paid 15 cents for these. They've had a couple of chances at least to, at the very least, scratch them. And it doesn't look like they did. Coming into today, there were about 3,000 of these still open. And looking at today's flow, a whopping, 50 odd have traded out there today. So 47, actually, to be precise. So they have not closed these. And as you said, the stock is now falling. It's at 506. So the window to scratch them has gone, probably. And looks like they may end up being a loser out here. So like we say, Mr. Flowmaster, you got these trades. You're trying to trade around earnings. It's a weekly trade to begin with. So the clock is ticking. Then on top of it, you had earnings on Tuesday. The stock popped to $5.12. I'm guessing you had a chance to, at the very least, scratch, maybe get out for a little bit. And alas, they did not, Mr. Flowmaster. What are your thoughts?
Yeah, I mean, some of the phone headlines, right, have been about how Apple's not the biggest handset seller anymore. So maybe somebody thought, I think it's Samsung now, maybe somebody thought that, like there'd be kind of some interest, some capital rotating, I guess, into these other telecoms. It's funny when I pull up that Ericsson and Trade Alert, it says Telefon Aktiebolaget.
Yeah, that's why I don't even try to pronounce that.
So I like it. But yeah, I mean, it's one thing that I would say, and like I said, I'm kind of disappointed in the market, but dispersion index, which SEBA's put a lot of work into, right, where basically we look at the implied kind of variance of stocks versus the index. Are all the stocks going to go together up or down, or are we going to see a dispersed set of returns, meaning it's a good environment for stock pickers? That's actually trended up over the last week. So as much as kind of, the S&P, and NASDAQ has hit weakness, the way that the single stock implied volatility implies the behavior is going to be is there are going to be winners, whether it's a just kind of this higher rates, longer regime, or I think if we get kind of more conflict in the world, at that point I would bet things will all move together. But this could be just simply that is people are like, okay, listen, we're going to pick some winners and some losers here and allocate some capital. Maybe that's what this is. But yeah, you're right. They didn't have too long to take their money, but I don't know, stock's up 3.5% today. It's certainly an outperformance versus the rest.
This is the rest indeed. Speaking of the rest, we got time for one more here. The FLOWMASTER has spotted another one. Let's go out to Hertz, ticker symbol HTZ listeners. They've had a rough year. They were trading $15 a year ago. They got as high as almost 20, 19 and a third back in July of last year. And then ever since then, it's been pretty much straight down. We've all heard the headlines about they're just choking on EVs, on these rental car companies. A lot of conflicting things going on out there for these rental car companies. All that a long way around to saying they are at their 52-week low right now of pretty much $5.95. So a rough day, a rough year for Hertz. Mr. FLOWMASTER, sir, what did you spot out there in Hertz today?
Yeah, so the put call in there is almost 2-to-1, which is high. Vol's up almost 10 points to 91. And it seems to be focused on the May 5 strike puts. So as you said, we're at a 52-week low. Stock hasn't been below 6 as far back as I can tell. That there was a whole corporate action with Hertz, wasn't there? Like during COVID, they kind of went bankrupt, but then they bounced out of bankruptcy, and people bought the stock that was supposedly worthless and actually made a couple bucks on it. But so what we see out there is in the May 5 puts, we've seen 20 to 21 cent buyers, about 7,000 contracts on the day. And this was when the stock was above $6. In fact, some of it stock was at $6.11. So just seems to be a position for some further downside. Now, it is possible that somebody actually is trying to kind of, bottom fish the stock, and they're loading up on the stock, but they want a little bit of coverage in case, it goes into some sort of a death spiral. But it stands out, very high implied vol, very high volume, 52-week low for the stock price, and almost 10,000 total of those May 5 puts have traded. And those I can see that in the data and the CBOE open close data that the net customer buying to open.
Yeah, you mentioned the bankruptcy. I was looking here. It went bankrupt in November of 2021. Carl Icahn owned 39% of the company, which he vomited for 72 cents a share going into the bankruptcy. So that's a bit of an ouchie, listeners, as we keep on rolling into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. We've been asking you questions fast and furious over the past week as interesting debates and discussions have come up. We have one going right now, kind of off that data point we hit earlier in the show about whether 5,000 is a make or break moment for the market. Right now, our audience exactly split 50% each saying look out below, and 5,000 just another data point. They're on the Uncle Mike kind of camp out here. Right now, our actual question of the week, I won't even belabor the zero-sum game thing again we talked about last week. That's been a hot thing. We just discussed it again on Options Bootcamp yesterday. I also cut in some people's comments from our other shows on the network, including what we talked about here last week. So if you want a full discussion of the whole zero-sum drama, check out yesterday's episode of Options Bootcamp. Our actual question of the week right now is very simple. The market's been in rally-ho mode for quite some time. In your opinion, what is the biggest driver of the rally? Is it the Fed? Is it the AI revolution? Or something else entirely, the infamous other? Mr. Uncle Mike, sir, what are your thoughts? Also, we have another flash poll out there driven by what we were just debating and discussing with our buddy, Mr. Matt from Oratz on the advisor's option on Tuesday. He's always been a little bit bearish of late. He has his infamous 3,000 before 5,000 poll that we did a while ago. We just readjusted it. We said, which level are we going to hit first? 6,000 or 4,000 in the S&P 500, which is obviously pretty much exactly equidistant from where we are right now. Our audience also equally split there, 50% each. So our audience can't make up their mind about what we're doing out there. Mr. Uncle Mike, sir, make up our minds for us, sir. What are you thinking about? What's driving this market? Is it the Fed, the AI revolution, or other?
Well, I think that recently it's been the AI revolution because of the fact that the Fed is not really committed to lowering rates or keeping rates the same. I mean, they say one thing, but they've stopped raising them. So that tells me that I don't know if it's necessarily them driving it because they just simply stopped raising them. They're taking an inaction theoretically. So I think ultimately what's driving the market is AI. And then in terms of 6,000 or 4,000, well, I'm going to pick 6,000 on that one. So that's where I stand.
You're no fun. Mr. Meatball, aka the newest member of the technical analysis crowd. Look for his forthcoming book, Technical Analysis: The Option Pit Way, by the greasiest of meatballs. Mr. Meatball, sir, what do you think is driving this market? The Fed, the AI revolution, or other? And where are you hanging out on our 6,000 or 4,000 poll? Which one are we hitting first?
Well, I think it's AI. I think that was clear as rates came off as rate cuts came off the table and we continue to rally, that it was AI driven. I think we're going to see a 4 handle first, but we're probably going to see 6,000 first.
There we go. Mr. FLOWMASTER, the final word is yours, sir. What is driving this market? The Fed, the AI revolution, or other? And 6K or 4K? What are we hitting first?
I agree. I definitely think it's the Fed. I do think that we get to 6K, though, before we get to 4K, because I guess I'm an optimist. But it's going to be rocky. I mean, we all know, volatility is kind of clustering, right? When you get these, we're seeing these 1% swings and even greater, right? From being up 1% to being down 1%. I think there were 3 or 4 days. So things are a little bit different. Every once in a while we put out stats. Mandy Zhu put out a stat about how the up moves have been bigger than the down moves so if you calculate a realized vol separately, looking at downs and ups, for about a year and a half, we've been seeing bigger up moves than down moves. That's changed obviously in the last week. The down moves are definitely happening a little quicker. So it'll be interesting to see if this is kind of just a temporary blip or if things are going to be rough for the rest of the year.
Speaking of things being rough, let's find out as we go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, as we go into our final segment here, it seems like the sell-off is continuing a little bit out there. The S&P off a full 0.25% now. The NASDAQ threatening 0.5%. The Dow swinging to the dark side, off about 0.15%. Haven't quite broken the 5K level, right around 5,008 as we're wrapping up the show here, listeners. Can we do it? Even perhaps later on the session? I guess we shall find out. Let's look really quickly. We got to 5,005, looks like, before we bounced earlier. So we shall see. We are threatening it. VIX a little bit north of 18 right now, 1810. Mr. Meatball, sir, we'll start with you. What are you keeping an eye on throughout the weekend until the Monday show? And then B, if folks want more option pit goodness, maybe some technical analysis goodness in their lives, where should they go? What should they do?
Well, we got Netflix earnings tonight. Those are going to be a driver. Obviously, every time a Fed governor opens their mouth, that is moving markets. But I want to see if this 5,000 level holds, and I want to see if my whole fill in the gap theory is right. And then we have a lot of earnings starting early next week. So there's plenty to keep an eye on. And if you want to know what I'm up to, follow me on Twitter at OptionPit, or head to optionpit.com and read The Trader's Edge. I put out content on it just about every day.
And I'm looking forward to your forthcoming book on technical analysis. So I think we can all learn a little something about the moving average.
TA.
King of the moving average.
Leisha is rubbing off on me a little bit, I think.
Clearly. All right, Mr. Uncle Mike, I know you don't brook with no technical analysis nonsense. What is on your radar until the Monday show, A? And B, where should folks go if they want more Uncle Mike goodness in their lives?
Watching earnings, watching 5,000, watching the upper 4%, if you will, on the 10-year note yield. And if you're looking to get a little bit more Uncle Mike in your life, check out my website, stcharleswealth.com. And also, you can follow me on Twitter at Mike TOSAW, TOSAW.
There you go. Give him a follow for some fun nuggets when he's not appearing on shows like this. And last but not least, Mr. FLOWMASTER, sir, what are you keeping an eye on in the market until, who knows, we'll be off another 4% by the time you join us again next week? What will be going on in the market then? What are you keeping an eye on? And B, if folks want to check out any of the cool stuff you're talking about in SIBO land, including perhaps these newfangled EuroFlexes that are all the rage with the kids these days, where should they go? What should they do?
So, well, one thing I'll be working on is finishing up some slides for OIC, where I will see you, and maybe we'll do a live show on Thursday. I'm looking at earnings. There are some big earnings coming out really right around the corner. We got Meta, Tesla, next week, Intel, Google. So, and I'm looking in Trade Alert at the implied move versus the historical. Meta right now looks kind of cheap in terms of implying around 11%, but the historical is around 14. Tesla's the other way around, is implying a bigger move than the historical. So, as you guys have talked about, there's some interesting trades there, very volatile. And then if you're interested in the EuroFlexes or anything else from CBOE, just go to CBOE.com/RMA, which is for Risk and Market Analytics. And Mark, Sebastian, I'd be happy to hear from you what technical alerts we should put out, because every once in a while we've gotten into it a little bit and said, oh, it'd be kind of neat if we could do, death cross alerts. It sounds very dire, and I'm not a technician myself either, but I do know that there's people who pay attention to it. So maybe we can collaborate.
I put my vote in for the death cross alert. It just sounds cool. You got to have that. People, even if it's meaningless, which the death cross kind of is, but it still just sounds too cool not to have it, Mr. Flowmaster. So I put my vote in for that, because everyone knows I'm a diehard TA guy at the end of the day. Unfortunately, listeners, that music means we come to the end of another epic sojourn through the world of options. But if you need more content, more goodness in your lives, don't worry. We got you covered. I'll be back in a little bit. All you folks in the pro, just hang out. We'll be back in a wee bit with our good buddy, Mr. Dan the Man Gramza, to break down all the action in the world of futures options coming up in a little bit on TWIFO. Then, of course, back again tomorrow, noon Central, 1 p.m. Eastern. Talk some vol. Who's going to join us on Vol Views tomorrow? Well, I guess you got to tune in to find out. Should be a fun one. And then after that, exclusively one final time for the week, we're back for a little bit of options oddities to break down the weird, the wild, the wondrous flow that is lighting up our tapes. And then we go away for the weekend to all relax and recharge until we're back again on Monday. Another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.